Could Elon Musk really be giving every American a $5,000 tax refund? And what does Dogecoin have to do with it? Let's break down this shocking announcement. Welcome to our urgent financial briefing. In today's rapidly changing economic landscape, staying informed about the threats to your wealth is crucial. From escalating global tariffs to Bitcoin's unpredictable swings and the looming threat of mass market sell-offs, each poses a significant risk to your financial stability. Imagine waking up to news of increased tariffs that ripple across global trade, affecting not just industries, but your investment portfolio. Tariffs act as silent disruptors, reshaping markets and introducing volatility that can lead to unexpected losses. Meanwhile, Bitcoin, the poster child of modern cryptocurrency, continues its wild ride. Its price swings can either make or break fortunes overnight, leaving investors on edge. And then there's the specter of mass market sell-offs, a domino effect that could send shockwaves through stock prices and investor confidence alike. These are not distant possibilities, but immediate realities that demand your vigilance and preparation. We're here to guide you through these turbulent waters, offering insights and strategies to help safeguard your wealth. In this series, we'll delve deeper into each of these risks, unpacking their complexities and exploring their impacts on your financial future. This isn't just about reacting to changes, but proactively positioning yourself to weather the storms. Our goal is to equip you with the knowledge and tools necessary to navigate these challenges with confidence. So stay with us as we explore expert opinions, dissect market trends, and provide actionable strategies designed to protect and grow your investments. As we embark on this journey together, remember, the key to financial resilience lies in understanding the risks and preparing for the unexpected. Let's face these challenges head-on and secure a stable financial future amidst uncertainty. Next up, we'll dive into the complex world of tariffs and how they're reshaping global trade dynamics. Stay tuned. Welcome to our critical examination of the financial landscape, focusing on a pressing issue: tariffs. As we step into the intricate web of global commerce, it's crucial to understand how tariffs are reshaping trade dynamics and shaking investor confidence. Tariffs, often viewed as tools for economic leverage, have rippled across borders, affecting not just the flow of goods, but also the stability of financial markets. Imagine a chessboard where every move is critical. Tariffs act as unexpected barriers, altering strategies and outcomes. They impose costs on imported goods, which in turn disrupt supply chains, inflate prices, and unsettle economies. This domino effect doesn't just end at national borders. It reverberates through global markets, creating ripples that reach your investment portfolio. For investors, this means increased volatility and uncertainty. The question isn't just about how tariffs affect trade, but how they pose risks to your financial stability. Investments once considered safe may now face unpredictability as market conditions shift. The impact of tariffs on investment portfolios can be profound. They can lead to fluctuating stock prices and unpredictable market behavior. Investors might find themselves on a roller coaster, with each tariff announcement sending shockwaves through the markets. But why should this matter to you? Economic uncertainty fueled by tariffs can erode portfolio values and impede long-term growth. It's essential to stay informed and agile, adapting strategies to mitigate these risks. As we navigate this complex terrain, it's clear that understanding tariffs is pivotal for safeguarding your investments. They are not merely economic measures, but significant influencers of financial stability. Stay with us as we continue to explore these pressing economic challenges. Up next, we'll delve into the volatile world of cryptocurrency, examining how Bitcoin's fluctuations add another layer of complexity to today's financial landscape. Together, we'll uncover insights and strategies designed to protect and grow your wealth amidst these turbulent times. In the world of cryptocurrency, Bitcoin stands as a towering figure of innovation and uncertainty. As its price swings dramatically, investors face a roller coaster of emotions and financial risks. Bitcoin's volatile nature poses significant threats to portfolios, often leaving traders and analysts scrambling to make sense of its unpredictable movements. Imagine seeing your investments skyrocket one day, only to plummet the next, leaving you questioning your financial future. This is the reality for many in the cryptocurrency market. the allure of quick gains is counterbalanced by the fear of sudden losses. It's this volatility that keeps investors on edge as they try to navigate these tumultuous waters. The impact of Bitcoin's fluctuations extends beyond individual investors. Its ripples are felt across financial markets worldwide, influencing stock prices and market sentiment. When Bitcoin sneezes, the financial world catches a cold, leading to a cascade of reactions from traders and economists alike. But why is Bitcoin so volatile? The answer lies in its very nature: decentralized, unregulated, and influenced by a myriad of factors ranging from global events to speculative trading. This unpredictability makes it both an exciting and perilous investment. For those holding Bitcoin or considering entering the crypto space, understanding these risks is crucial. While the potential for profit is enticing, the stakes are high and the losses can be devastating. It's essential to approach cryptocurrency investments with caution, armed with knowledge and a strategic mindset. In this segment, we've explored how Bitcoin's volatility can impact your financial decisions and market dynamics. As we move forward, we'll delve deeper into how these economic shifts threaten your portfolio and what you can do to protect your assets. Stay tuned as we uncover more about safeguarding your wealth amidst these uncertainties. In the ever-shifting landscape of global finance, one looming threat stands out: the potential for mass market sell-offs. These events can send shockwaves through stock prices, leaving portfolios in disarray. But what exactly triggers such a widespread panic? Understanding the indicators is key. Market sell-offs often start with a subtle hint: an unexpected dip in economic confidence or a sudden geopolitical upheaval. Investors, sensing danger, begin to retreat, leading to a domino effect. Stocks that once seemed untouchable start to lose their sheen, and the decline can be rapid and unforgiving. The impact on stock prices is profound. What might begin as a minor sell-off can quickly escalate, with prices tumbling and investor confidence plummeting. In such turbulent times, even seasoned investors may find themselves in a quandary, questioning every decision, every strategy. Investor reactions to these changes play a crucial role in the unfolding drama. Some may opt for the safety of bonds or precious metals, while others might pull back entirely, waiting for calmer waters. These reactions further fuel the sell-off, as fear and uncertainty grip the market. But it's not just about recognizing these signs, it's about knowing how to respond. Being vigilant and staying informed are your best defenses. Keep a close eye on market trends, listen to expert analyses, and be prepared to adjust your strategies swiftly. As we delve deeper into these financial risks, remember, forewarned is forearmed. Identifying the signs of impending sell-offs can make all the difference in safeguarding your investments. Now that we've explored the potential devastation of mass sell-offs, let's turn our attention to how these economic threats directly affect your investment portfolios. Understanding these impacts is vital in crafting a robust strategy that withstands such financial turbulence. In today's volatile financial landscape, investors face a myriad of risks directly affecting their portfolios. With tariffs reshaping global trade dynamics, Bitcoin's wild price swings, and the looming threat of mass market sell-offs, understanding how these elements impact your investments is crucial. First, let's explore the risk factors that are currently shaping investment portfolios. Tariffs not only disrupt international commerce, but also inject uncertainty into the markets, causing fluctuations that ripple through individual portfolios. Meanwhile, Bitcoin's unpredictable nature continues to baffle even seasoned investors, its volatility presenting both opportunities and threats. Diversification stands as a key strategy in managing these risks. By spreading investments across various asset classes and geographical regions, investors can mitigate potential losses. This approach not only shields against the volatility of a single market, but also takes advantage of growth opportunities globally. Furthermore, it's vital to consider the long-term versus short-term impacts of these economic threats. While short-term market fluctuations can be unsettling, maintaining a focus on long-term growth and stability often proves more beneficial. This perspective helps investors ride out temporary storms and capitalize on eventual market recoveries. These economic threats directly impact your investment portfolios. Here's how. Tariffs can alter the value of your holdings overnight, while Bitcoin's highs and lows test your risk tolerance. The potential for mass sell-offs could devalue assets quickly, leaving unprepared investors vulnerable. But not all is bleak. By understanding these risks and employing strategic diversification, you can fortify your portfolio against unexpected downturns. This proactive approach not only preserves wealth, but also positions you to seize opportunities as they arise. Stay tuned as we delve deeper into expert insights that further elucidate these risks and provide actionable strategies to safeguard your wealth. Remember, in these uncertain times, informed decisions are your best defense against financial upheaval. In the midst of a turbulent financial landscape, we turn to the experts for clarity and guidance. Today, seasoned analysts weigh in on the pressing economic conditions that are causing ripples across the market. From the impact of tariffs to the volatility of Bitcoin, these professionals provide a crucial lens through which we can better understand the risks at hand. As we delve into their insights, we uncover predictions that shape the future market trends. These forecasts are not mere speculations. They are grounded in rigorous analysis and a deep understanding of economic patterns. With their expert opinions, we gain a clearer picture of what might lie ahead and how to brace ourselves for potential shifts. The experts emphasize the importance of staying informed and agile in a rapidly changing environment. They highlight key indicators to watch for, offering advice that could mean the difference between safeguarding your wealth and falling prey to market pitfalls. This segment serves as a beacon of knowledge, urging us to navigate these uncertain waters with caution and foresight. Moreover, their advice doesn't stop at identifying risks. It extends to actionable strategies. These financial analysts share their wisdom on diversifying portfolios, adapting to market changes, and maintaining resilience in the face of adversity. Their guidance is both a warning and a roadmap, equipping investors with the tools needed to protect and grow their assets. As we conclude this segment, it's clear that expert opinions are invaluable in decoding the complexities of today's financial risks. Their insights offer not just a glimpse into potential threats, but also a pathway to mitigate them. Up next, we'll dive into specific strategies for safeguarding your wealth amidst these economic challenges. Stay tuned as we explore practical steps to fortify your financial future. As we find ourselves amidst a tumultuous financial landscape, safeguarding your wealth has never been more crucial. Today, we'll dive into actionable strategies that can help protect your assets from these looming economic threats. In an era where tariffs disrupt global trade and Bitcoin's unpredictable nature stirs volatility, diversification is your first line of defense. By spreading investments across different asset classes, you can mitigate risks and cushion your portfolio against sudden market shifts. Consider diversifying not just within stocks, but across various asset types, bonds, real estate, and even international markets. Each plays a unique role in stabilizing your financial future amidst uncertainty. Now let's focus on asset protection. Evaluate insurance options that can shield your investments from unforeseen circumstances. Whether it's portfolio insurance or investing in hedge funds, having a safety net can prove invaluable. Building a resilient portfolio requires a keen understanding of market indicators and trends. Stay informed and adapt your strategies to align with evolving economic conditions. This proactive approach ensures your wealth grows steadily, even when markets falters. Moreover, keep an eye on liquidity. Having accessible funds allows you to capitalize on opportunities swiftly or weather financial storms without resorting to panic selling. These strategies are not just about surviving economic threats. They're about thriving in the midst of them. By implementing these measures, you're not only protecting what you have, but also positioning yourself to seize potential gains as markets stabilize. As we move forward, remember that knowledge and preparation are your greatest allies. In the next segment, we'll explore the importance of staying informed and how continuous learning can fortify your financial security. Stay tuned for essential insights on keeping abreast with the latest financial news and trends. In these uncertain times, taking decisive action is crucial. Equip yourself with the strategies we've discussed and empower your investments to withstand whatever economic challenges lie ahead. In today's fast-paced financial world, staying informed is not just beneficial, it's essential. As we navigate through the intricacies of tariffs, Bitcoin volatility, and market sell-offs, the need for awareness becomes ever more critical. Being well-informed allows investors to anticipate market shifts and make strategic decisions that safeguard their portfolios. Keeping up with financial news is the first step. Regularly reading reputable financial publications and subscribing to market analysis updates can provide a steady stream of information about economic trends and potential risks. Understanding market indicators, such as stock indexes and economic reports, further enhances your ability to foresee changes and adjust your strategies accordingly. But staying informed goes beyond just consuming information. It involves continuous learning and adaptation. The financial landscape is constantly evolving, with new investment vehicles and economic policies emerging. By participating in webinars, attending financial seminars, and engaging with expert analyses, you can deepen your understanding of market dynamics. Moreover, leveraging technology can streamline your information gathering process. Utilize financial apps and tools that offer real-time data and alerts on market movements. This ensures you're not just reacting to changes, but anticipating them, positioning yourself ahead of potential downturns. Staying informed is a proactive strategy that empowers you to manage risks effectively. It enhances your ability to pivot when necessary, ensuring your investments remain resilient in the face of uncertainty. As we continue this journey through the complex financial landscape, remember that knowledge is your most powerful asset. In our next segment, we'll explore how you can transform this knowledge into actionable strategies that protect and grow your wealth amidst these economic threats. Stay tuned as we delve into the conclusion and call to action, where we recap key insights and motivate you to take decisive steps in safeguarding your financial future. As we reach the end of this urgent briefing, it's time to reflect on the financial landscape we've navigated together. From the looming threats of tariffs and the unpredictable dance of Bitcoin to the ominous signs of potential market sell-offs, these are not just abstract risks. They're real challenges that demand our attention. We've dissected the impact of these threats on investment portfolios and explored expert insights, equipping you with knowledge to face these hurdles head-on. Remember, understanding these risks is just the beginning. The true power lies in the actions you take. Now is the time to implement the strategies we've discussed. Diversify your portfolio, safeguard your assets, and stay informed. These are not merely suggestions, but crucial steps to protect and grow your wealth in these uncertain times. The urgency of our message cannot be overstated. The financial world is fast-paced and ever-evolving, and complacency is not an option. We urge you to act decisively. Review your investment strategies, consult with experts if needed, and ensure your financial plans are robust enough to withstand the turbulence ahead. Empower yourself with knowledge and confidence, knowing that you have the tools to navigate through these economic uncertainties. Your financial future depends on it. Thank you for joining us in this critical discussion. Stay vigilant, stay informed, and most importantly, take action today. Together, we can weather any storm the market throws our way.